So I've always had the dream of building my very own property investment portfolio. And I know many of you guys also have the same dream too. Because of this, I'm joined with Kazy, a property investor and developer, to share some tips and tricks on how we can build our very own property investment portfolio. Hi Kazy, how are you doing today?
I'm good. I told you, I've got a train here. I'm well proud.
You know what, guys? Kazy shared that he never normally gets the train to train anywhere in London, and he got on the train today to go onto the podcast.
No, this seriously might be my first train journey. Well, no, I went to Birmingham once, but in London in at least the last 5 years.
Wow. So you got the train, you're wearing all things money blue.
Listen,
You're ready.
I made sure that I was on brand.
Good. I love that. And I guess for everyone listening, please introduce yourself.
So Kazy Alli-Balogun, better known as Kaz or Kazy from Property by Kazy, and I'm a property investor and developer based in London.
Amazing. And please tell us all what got you into the property investment space and how big is your property portfolio now?
Yeah. So I guess how I got into property is how a lot of people do. It's just number one, through wanting ownership, and number two, from being, I guess, an entrepreneur. Like, property isn't intrinsically different from any other business. It's just that it's often a lot higher stakes at the beginning because it takes a lot of capital to get started. I'd sort of run various businesses. Been involved in various different types of investment, starting with a shisha business that grew from sort of being a £500 startup business to operating in some of the biggest clubs and nightclub in the UK, to doing festivals like Festival and V-Fest at the time. And yeah, it went well to the point we got our own premises, started trading out of there, but we had something called a license to trade, which effectively is I guess akin to what most people understand as like an AST, so an assured short hold tenancy. So effectively what that means is you can operate, but at any point in time, the landlord can just give you your 2 months notice.
Right.
Whereas with standard leases that you take on generally take on commercial premises that were within the Landlord and Tenant Act, you can renew those indefinitely. So effectively you can invest in the business. So I had this business that was going really well, or I thought it was going really well, but unfortunately I couldn't invest in the asset in the longer term to add value. So my next natural progression thought was, okay, whatever I do next, and I think it's kind of it's a very English, but also a very African and Nigerian adage in that my dad always kind of said, look, we don't rent, we own. And I kind of remember that from a young age as well. So the next thing I said, look, whatever I'm going to do next, I've just got to own the building. And that was kind of the start of me buying and investing in property from the profits from that first business.
Wow, incredible. And it's the way you're sat here so casually, and I'm just like, and you know what? Firstly, I get it when it comes from African backgrounds. My mum's always said Ola, I'd rather you live at home than spend money on rent. So I get that. And then also just wanting to own your own property. So how did you get started with actually purchasing your very first property?
Yeah, no, for sure. So obviously I was fortunate enough that, I had a business that was, I'd say particularly at the time, I'm sort of 21, very successful. We were making thousands of pounds a day, profit wise. As a business, markups at a point in time, you're looking at 1,000% markups on shisha, high markups on the rest of the products that we sold as the business. So it was going well. And, for a lot of people, and this is probably going to be a kind of a bit of an unpopular take for property people, when people often ask, where should I get started and what's the best place to invest? I normally always say in yourself or in a cash flowing business.
Yeah.
Because property can eat into your working capital and your cash pot very quickly. So, made some money, probably accrued 70 to 80,000 pounds worth of savings.
Okay.
And just I think the starting point is a lot of people have things they want, but they're not necessarily things they need when they're looking at their first property. So people will say it has to be in London, it has to be near my mum and dad's, it has to have a garden, it has to have a parking space, it has to be at least 2 bedrooms.
Literally me looking for my first property.
Yeah, and I think I've seen a lot of friends that do that, and they've been waiting because they've been in their place that's lovely where they rent.
Yeah.
But in their head they're like, well, I don't want to buy somewhere that I don't love, so they don't do that. But for me, I was like, look, what can I afford? What's local? And I found this 1-bedroom flat going at auction, obviously, so it was very cheap, quite run down in a bad state. The communals were terrible. Unfortunately, there was some people in the building that probably had some drug problems, so like the communals hadn't been looked after. But I just said, look, like, there's not a lot that needs to be done to these communals internally. There was a lot of scope to add value.
Yeah.
Firstly through the refurbishment, but also through a strategy that I'd learned from, you know, some other people in terms of adding value, so turning a 1-bed into a 2-bed, and purchased that first property at auction, I believe, with a bridging loan. So bridging loans are important because at the time I was self-employed, so I wasn't mortgageable.
Yes.
In that I hadn't been self-employed for long enough. You are mortgageable being self-employed, but I personally wasn't.
Yeah.
I probably didn't have, I didn't have the best credit due to an extended trip to Ayia Napa whilst being on contract and not paying the bills.
Yeah.
But yeah, like I was able to make it work, and it worked not because I was amazing at what I did at the time. Like I made a lot of mistakes.
Yeah.
But it worked because the numbers worked. So like I kind of always tell people, like you really have to make sure that, you know, you live in the numbers. That's what's going to define whether or not a property makes sense to buy, not, you know, what your friends tell you or what just looks nice. But yeah, we bought it for, I think, around 200 and I want to say 10,000, something around that amount.
And which area?
Sydenham, so SE26,
yeah.
so very close to where I grew up, like literally a quarter of a mile from where I grew up in sort of Crystal Palace, Anley sort of way, and then sold it that same year for, I think, just under 310,000 after, you know, sort of using all my resources to refurb the property and, you know, probably using some builders at the time that I wouldn't use again, and, you know, doing all of the runs to go and get materials in my car. So I had washing machine, you know, tiles, tile adhesive, everything in the boot of my Honda Civic. But we managed to make it work.
Good. I love that. And I guess, you know, this podcast today, we're going to delve into more of your story and also hopefully share other tips for other people, I guess, looking to do the same and be as successful as you, because I think your success is really inspiring and I love hearing stories about this on the podcast. But I've got a couple of quick fire questions for you to kind of warm you in the seat of the podcast this afternoon. Okay. So one of my very first questions is, what's been your greatest financial achievement?
Yeah, that's a good question. Do you know, it's weird. I can't think of any like specific thing that I've bought that and I've been like, oh, like I really like enjoyed buying that.
Or just seeing the profit you made on your first property, or anything.
Yeah,
really.
Like the profit I always kind of got lost in, because like they say the sign of a good developer is a broke developer. So as soon as you get the money, it's supposed to go back out the door. Like half the time, I don't even want. I tell the solicitors, yo, just hold it for me for a second.
Yeah.
Because I'm buying something else. I don't even want to see it. Look, probably like a couple of years ago, it was a jacket. Like it was part of the last like Louis Vuitton collection with Virgil. Okay, and I really liked it. It was a jacket, like a leather varsity jacket that I really wanted, and I probably would have never bought like years ago. So I probably quite enjoyed that purchase.
Okay, no, I love that. And that leads me perfectly into the next one, because I feel like I want to know Kazy as well, because I've seen you online for a while now. So my other question for you is, what's one guilty pleasure you like to spend your money on?
Yeah, it's the fleeces. the Louis Vuitton and a few other brands, Prada fleeces, like they've got me. Like ski season, we talked about skiing, I like to be able to ski in style, because if I'm falling over, at least I've got to look right.
I respect that, because you're there skiing in like Louis Vuitton fleeces. I'm skiing in vintage jackets.
Yeah, but it's, do you know what I mean? As long as everybody's looking good and having fun, that's the main thing, really, isn't it?
No, 100%. I love that. And I think when it comes to like how we spend our money, I say this all the time, it's about a healthy balance, right? It's about treating yourself, but also knowing you've still got goals in mind, and you're a very clear example of that, and the fact that you've gone down the route of property investment, but you can also treat yourself from time to time as well.
Do you know what it is? Like with money, I think you've got to work out what your own relationship is like what your drive is, because for a long time, like, you know, people that remember me, they'll remember me in this hat that I got from Primark randomly at some point, the most random clothes. Like I remember like sort of being people asking like, "You're right," like, you know, like, "You're right," like you got the building stuff on, like the tracksuits ripped, and my mid-20s, I didn't spend money on clothes, anything. I was just so locked in and laser focused. But again, it's really good to have different people around you, because I had friends that were really flashy, and they kind of were like, look, sometimes you're getting too comfortable to the point that you're losing your hustle. Yeah. And sometimes you have to almost spend to remind you that, oh, that cost a lot. What am I going to do to make that back? And I think life is all about finding a healthy balance of what works for you. Like, you don't need to be the person that's saying you're not allowed to go to Costa if you want to buy a house. And also, you don't need to be the person that's like, right, you got to spend to your limit to make you hungry. You got to find what works for you within, you know, your own sort of like personal stance.
Yeah, I agree. That's a really beautiful word of advice. And I would say the exact same. I think, yeah, what is your personal relationship with money? Working that out before you then start chasing these goals. And because I think if you're maybe naturally an overspender, trying to save, I don't know, £80,000 as a deposit for, like, let's say your first investment property, might be a bit of a struggle if you're someone that likes to overspend, or if maybe you're financially anxious. It's about building those healthier habits to, I guess, curb those kind of feelings. But I guess, you know, you are a multi-million-pound property portfolio holder. So how did you go about building your property portfolio from that first property?
So yeah, so the first one, obviously, I technically didn't build a portfolio. Like, you know, I bought it and I sold it because I needed to recoup the money to go again. And I think, you know, one thing you realize is when you do something once, you can rinse and repeat and keep doing the same thing. And what I started doing was like, look, flipping properties, which is, you know, there's often a debate between, is it better to flip or hold, refinance, etc. But what I did is I tried to have more of a focus rather than say, look, I'm just going to buy stuff and refinance it and then hope to kind of regain the cash pot. I'd maybe flip a few and then after that use, for argument's sake, to use like, you know, some random numbers. Let's say you started with £100,000.
Yeah.
And you used £100,000, you could get a 30% return on your money. So you did that twice, and now rather than being £100,000 of working capital, you went to 130, then got 30% on that. Now you're at say 170. You can then now go and buy a property, maybe do the same thing, but at this point you refinance, and you know maybe you have to leave in £50,000 when you refinance, but you still have your working capital to go again.
Yeah.
And effectively, I guess that's what it is. And I was trying and testing a lot of different things. You know, I went down HMOs, went down, you know, commercial property, residential conversions, like loft space development, loads of different things in terms of finding what works for me. And over time, just the properties that made sense to keep, you know, I'd keep, and the ones that made sense to sell, I would sell. I wouldn't be too emotionally attached to be like, I've got to hold everything. It was more of a case of, and that's the kind of the way I live my life, is like, what did the numbers say? And try and avoid the emotional attachment. Yeah,
and I guess you've mentioned a few methods of, I guess, investing in property. What do you think is the best method for you?
For me personally, it's changed over the years. So like, I've run a rent-to-rent business.
Yes.
And for those that are not familiar, it's where you rent out an asset from, you know, like a landlord. You then go and rent it to your own clients. So that could be for Airbnb, could be HMO, so houses multiple occupancy. It could be, you know, assisted living to like a care home facility or something like that.
Yeah.
But we were doing renting houses from landlords and renting them out to professional sharers. And I took on 50 plus of those units. That's 300 tenants. That's like, you know, a rent roll of 7 figures per year.
Wow.
And that was really good from a cash flow perspective, but it didn't give you the ownership, and it's effectively running a business. So that's great from a cash flow perspective, but it's not going to build your portfolio. But did that for a while because it allowed me to flip without the pressure of, well, how am I going to live? How am I going to eat? How am I going to pay my own bills? At the point that I grew the portfolio, you know, basically my point is that things always pivot. So, you know, I was kind of heavily focused on residential conversions, and that works really well because of an uplift. But then there's sometimes changes in legislation, changes in national planning standards.
Yep.
And I think one of the most important things, like, you know, in property, but in business as a whole more so, is the ability to pivot based on changing market conditions.
Yeah. And as I'm sure you know, market conditions have changed. We've had credit card crunch, we've had COVID, we've now got changes to stamp duty. Everything, I think, changes literally every other month. How do you cope with those changes?
I think being aware, like, look, like one of the things like we talk about, and I said, like, you know, I run like a community of people where I help them on their property journeys, is we talk about like information is power. So like there's like, you know, there's changes, you know, the Leaseholder Reform Act is becoming statute that's going to change the way in which leaseholds are. They're talking about introducing common holds in place of, you know, like standard leaseholds going forward, changing the way that leases, you know, are renewed with the abolishment of the Section 42 notice. There's so many different changes, but having that information allows you to navigate and negotiate preferential rates sometimes because of information. So I would say the more you can be versed in legislation that's either come or is coming, the more you can use that to prepare yourself and make your strategies more I would never say future proof, but future resistant.
Yes, I love that. That's a good word, actually. But yeah, it's changing all the time. And I feel like sometimes the news can be really overwhelming. And because they don't break it down for people that are literally clueless, like me sometimes, it can be daunting. But I guess a selfish question for me is, how do you go about picking the locations of your property? So, and I asked that because last year I was looking at maybe, rather than buying a property for myself, maybe buy a property as a buy-to-let. But then I had that checklist, right? I then had a checklist of, okay, if I'm going to be a landlord of a property, I don't want to be this too far from London because I don't want to be trekking, I don't know, miles just to be able to check on the property or the tenants. Or I wanted it to be a 2-bed because that meant 2 possible income streams. So yeah, how did you go about picking the locations of your properties?
Location-wise, for me, it was very straightforward. Like, I
Okay.
want to be as close to areas that I know as possible because it's information, right? Like,
Yes.
the more I know about an area, the more I'm able to isolate where potentially properties have been mismarketed, where you
Yeah.
can buy them for a more competitive price point. If you know the right catchment area for the right school, the right transport links, the one that, you know, is just, that road's actually a cut-through road, so actually it's not as good as it looks on paper. So I would say, like, in terms of where to buy, probably you're right in that you don't want it to be too far if you
Yeah.
don't have the skill set or the people, you know, in those specific areas that can help you look after the property. But I would say where to buy probably a lot of the time isn't location driven as the primary driver, but it's price driven. Where can you get the most bang for your buck? Where can you get the most value for money?
Yeah, that's a very good question. Yeah, okay. My brain's ticking now. My brain's ticking with some ideas. And I guess, you know, you've obviously been on this property journey for a number of years now. What's one thing you wish you knew before you started investing in property?
I'd say for me personally, like, again, like a lot of the stuff that I say, like, because property is just this, it's just business. So like one thing I wish I didn't think was that, you know, starting out, I always saw these things that said, oh, you've got to have multiple streams of income, you've got to do so many different things. So I
Yeah.
touched on the fact that I've done new builds, done residential conversions, commercial conversions, rent to rent. But realistically, I thought, you know, if I just focused on one strategy and did it really, really well,
Yeah.
like, I probably would have been more successful. And I say that to say that, you know, if you're on Instagram, TikTok, you're scrolling and you're seeing all these bits of bite-sized information and you're seeing somebody saying, make millions of pounds from rent to rent, make millions of pounds from commercial conversions. Like, you don't have to try and do all of them to feel like you get that FOMO, that fear of missing out.
Yeah.
Like, do kind of that personal SWOT analysis, work out what you have at your disposal. Do you have time? Do you have money? Do you have expertise? Do you have a good contact base? Do you have a, you know, an interchangeable skill set? Work out which one is in fitting with what you want to achieve and what you're good at.
Yeah.
And then just laser focus on that one strategy.
Okay, no, that's really helpful because, yeah, like you mentioned, there's so much information online sometimes that I guess if you're looking to start, you don't know where to start because there's just too many options. And I guess maybe for some people, capital is a big thing. But I think it was either your piece of content or someone else's piece of content about being a property developer, investor. And I feel like lots of property gurus love to say that investing in property is a source of passive income. Do you believe with that? Do you believe in that notion that investing in property is a source of passive income, or are there things that maybe some people online don't actually tend to share?
Like, there's a lot of buzzwords, passive income, financially free, that we hear, you know, from a lot of people that do really well in property. But I think the reality is, you can buy in, you know, like middle management to make anything as passive as possible. So yes, to a degree, like if you've got a buy-to-let portfolio and a really good property manager or team of estate agents who look after your portfolio, then to a degree it can be relatively passive. What I would say is that, you know, it's probably still going to fluctuate a lot because that investment vehicle, you know, what if the tenants vacate? What if, you know, the boiler breaks down? What if the roof breaks? What if there's so many what ifs that I would say it can be passive. Like, look, you know, if I said, look, I just want to retire and I want to have my property portfolio, it would be a relatively passive stream of income in relation to a lot of other businesses because it can take, you know, long form standardized, you know, long form contracts. You can have commercial let agreements if you want to take on guaranteed rents. There are things that you can do, but it's also going to erode your margins. So like any business, you can buy any expertise, but it's going to reduce how profitable the business probably is.
Yeah, no, that's really helpful to know. Like I said, my brain cogs are turning because I'm just taking all these mental notes because, yeah, I feel like maybe for a lot of people like myself listening to the podcast or watching, they want to invest in property, but I guess there is that, although you say it's, I guess, a sort of business, there is, I guess, a high level of risk involved because maybe of the amount of capital you're about to invest in it. Or would you disagree?
I guess it's arguable. Like, I would say it's probably lower risk because the intrinsic value is in the asset. So if you were to invest in a hair salon, which I can see you've got lovely hair today.
Thank you.
The thing is that that's reliant on that person doing good business. It's a personnel-led business.
Yes.
And if, for example, they annoy the wrong influencer or, the council or, you know, other people that are stakeholders in the business, effectively that value of business could drop to zero if, there's no clientele.
Yeah.
Whereas with property, it's in the value of the asset.
Yeah.
So you could have a bad tenant and you could have some bad months, but realistically, there is always going to be a bricks and mortar valuation of the asset, even if it's ripped to shreds. So I would say there's different types of risk. You've got more capital at risk, but you're actually where you can get to in terms of going to zero because any property has to be insured.
Yes.
You're going to have a lot more coverage than probably, look, if you was to invest in a bar, for example, could you lose its license tomorrow and the value of that bar goes to zero? True. If you were to invest in a restaurant and they lost their health and safety trading standards again, values or the reviews went really bad. So I think in that instance, it's probably lower risk. And that's why when you see a lot of Alan Sugars, Richard Bransons of this world, you see they're heavily invested in property because actually to de-risk their existing cash flowing business portfolio.
Yes. Okay. Makes sense. And hopefully that answers some of your questions, guys, because I know a lot of people are going to be like, but there's risk. And I feel like, the nation are great savers. But when it comes to actually putting our money elsewhere, I think that's where people get a bit scared, and rightfully so, especially when, life is just very unpredictable. But I guess, like myself, there's many people listening to the podcast that probably want to get started with investing in property. So do you have maybe 3 top tips, I guess, to help those people get started?
Yeah, I would say number 1 is work out what you want out of property. Because the starting point is when I sit down with people, I say, look, what do you want? Do you want to grow your working capital, so have a capital appreciation?
Yes.
Or do you want yield, return on your money? And most people are going to say both. But the reality is to try and find both is to try and find, the unicorn. It's the mythical creature that does everything. And when you're waiting for the perfect opportunity, you spend so much time waiting with no action, and then your savings get eroded by inflation.
Yes.
Property prices are going up and, increasing as well. So I would say work out what you want to do and take action as soon as you're comfortable.
Yeah.
Number 2 would be to work out where you are in relation to where you want to be. And what I mean by that is a lot of people say, I want to buy my first home, but but I've got bad credit, so I'm not going to look yet. Or I don't think I earn enough. But how do you know how bad your credit is unless you download your credit report?
Yeah.
How do you know if you don't earn enough unless you sat down with, a mortgage broker? So I would say work out where you are. And if you know that, look, you know what, you're probably 6 months away in terms of your credit, you can work on getting a cash builder credit card. You can work on making sure you're on the electoral roll. You can work on credit utilization, paying down bad debt. So I'd start to look at actually managing your credit, but also working out where you are. And then I guess the third and final tip I would just say is, look, you have to get educated to a degree. The same with any sort of job role, improve your skill set. And you can do that for free. You can do that by watching, podcasts like this, other podcasts, Instagram, TikTok. There's so much content there is to consume. Going to networking events. Again, you can go on Everbright, type in property, and you're going to see 20 odd events this week that you can go to and attend. And then outside of that, if you feel confident, then go ahead. If not, then maybe look for a mentor and look for somebody that can really help to guide you if you think that's what you need.
Yeah, no, thank you for those tips. And I feel like there's a lot that I want to take on board because, I spoke to a mortgage advisor last year for a residential property, but I actually haven't made the effort to be like, okay, if I actually want to invest in, let's say, a buy-to-let, what does that look like, especially as a business owner? I'm self-employed. So again, rules change there. I guess, to wrap up today's podcast, if there's anyone kind of on the fence and maybe need that final piece of advice, what would you share with them?
I just say, the honest thing I would just say, if you're fortunate enough to have parents that have owned their own home, aunties, uncles, cousins, just go and ask them what they paid for it. Go and ask them what they do for work. And chances are a lot of them, in terms of the savings they've accrued, they've never saved more money than they have made from their house. And if that doesn't inspire you to do it, then I don't really know what will.
Facts. And yeah, that's maybe a conversation I need to have with my mum, because I think a lot of us know that the value of property does increase. Maybe might not be the big differences, like let's say if I bought a property in the 80s compared to now, but there definitely is still capital appreciation in property. So I really like that final word of advice, so thank you very much for sharing. But obviously, thank you very much for joining me on the podcast today. It's been a pleasure having you. I feel like I've learned a lot, and I'm going to have a couple of questions for you off the podcast as well, for selfish reasons. But if anyone would like to check out your content or would like to join your property community, how can they go about doing so?
Community, pbkcommunity.com. You can go and watch some more info there. Property by Kazy on Instagram, YouTube. Check us out. Loads of content. Free content as well.
Please do, guys, because he actually creates amazing content. So thank you very much again for joining me.
Appreciate you.